Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look on the performance of the euro currency again. You can see, well, yesterday it was a bit volatility during the recent session, but actually it's once again the events that actually market were waiting for has not confirmed the expectations. So mostly it was Joe Biden's speech concerning the situation in Ukraine, and it was really could make impact on the markets as well, but as it has appeared, the sanctions that have been announced, so mostly widely, have been expected already, and actually they were more or less light. So that's why you can see on the markets we do not have yet the big performance, wide performance, and actually it was not, it hasn't made any significant impact on the performance of the markets. At the same time, now as market is getting some relief, at least temporarily, we should return back and use the technical background and cross-market analysis to understand what could happen in nearest time. And from that standpoint, I would like to show you the dollar index again and performance of the 10-year yields. On the dollar index, we already said that we have two bullish grabbers. Both of them suggest at least moving above this top. This is minor grabbers, but they keep us in tension and do not let us to easily take the position or consider taking the position on the euro currency. So we should be aware of possibly a bit lower action on the euro currency and a bit higher action on the dollar index. I suggest that it might be kind of the ABCD pattern here, and scarcely triple to sell might be formed. That's actually agrees with the idea of the possible head and shoulders on euro currency. At the same time, the one thing that I do not like here, and I already talked about this, is performance of market at this point. So if we would suggest that we are coming to the head and shoulders, this is not the way how market usually forms the right arm. So it should be dropped to the neckline, and somewhere here we have some sudden stop, upward action forming multiple grabbers. This is not kind of the bearish divergence, and I suspect that it might be some sign that in the future there might be some external factors impact, such as the escalation of the geopolitical tensions or something of that sort. So I wouldn't take off the table the situation where the dollar will just keep going higher and the euro currency will drop below the lows. And it is really easily to fit with the overall geopolitical situations that stands in Europe. So existence of the hot conflict in Europe, it's already a negative factor. So that's why I don't think that this is really impossible. So this is really possible. Second moment is on the dollar on the 10-year yield. So if we'll take a look, here's market has formed recently reversal bar. So market returns back out from the safety and to the domestic financial problems in the United States, which is inflation, as we know. And forming of this bullish reversal bar suggests that interest rates might go higher in the nearest few sessions. In general, since market stands tight near the target of the butterfly, showing no significant pullback, it seems that reaching of the 1618 is just a question of time. From that standpoint, it's also supportive to the United States dollar. That's why currently, despite we see some anemic action on the euro currency, and it seems that market is finding the bottom, it's ready to turn up, I think that it's not yet the time for position taking. At least on the 4-hour time frame chart. So on the 4-hour chart, where we're considering the butterfly, right? So these targets and this as well. But first around 1250. But at least on the hourly chart, we could get something of this kind. So downward action, if even we exclude this potential drop to the 1180, we will see what will happen. But reaching of this level seems very probable, is because on the hourly chart we could get the free drive pattern. So theoretically it is possible, and well, at least market very accurately holds the ratios of the free drive pattern. You can see they coincide in the tight range in 1272 area, 1270, 1264 is actually, it perfectly agrees with this support area. So with the cross market performance of the dollar index of the 10-year yields, with the performance on the euro itself, I wouldn't hurry up with the taking the long position and keep watching what will happen and think about it at least when the market hits this area. Of course, it is arguable concerning these two targets, but reaching of this target is, well, I think that it makes sense to wait for it. Speaking on the geopolitical situation, I think that this is temporal silence. It's just because, well, we not need to be a prophet to suggest that hardly Russia will keep without attention the rest of the Ukraine. Because if it will happen so, its territory will continue to be used by the United States to keep some tensions, and Russia will have to resolve this problem anyway. That's why, although currently it seems that it's some silence, it's coming down of the geopolitical situation, but I think that this is silence before the storm, and soon we probably will get some escalation in this region, which just then fits to our suggestion of the performance of the dollar, performance of the euro in the nearest time. So things that we have discussed in weekly report. And of course, in the weekend, we will take a look a bit deeper in the geopolitical situation and interest of the United States in the current situation. What is favorable for United States, for what is not very good for United States. And depending on how the situation will develop, we will be able to make some conclusions what to expect and what performance might be on the Forex market as well.